Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be dissecting April production results from all of the top miners we cover on the channel. This was obviously a pivotal month for the sector as we saw the halving, transaction fees, rune activity pickup, a lot of information contained within these charts. Of course, on top of that, we're going to be covering preliminary TeraWulf earnings and numbers. We've got TeraWulf coming on the channel on Friday, but we definitely wanted to dig into the initial results that we're seeing in this report. Now, before we get into all that, please take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments below which of the miners won last month in terms of production, your thoughts on TeraWulf, and your top pick in the sector moving into the back half of 2024. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, a really exciting one for you. We have an action-packed agenda. Anthony's brought along, I think, the most charts I've seen in a monthly recap, Anthony. A lot of data points here. We're going to be going through April production for the miners. This was obviously a very important month and pivotal month for the entire Bitcoin sector, so we're going to unpack that. And we've got TeraWulf earnings. Now we have TeraWulf coming on the channel Friday for a traditional interview, but obviously we wanted to get Anthony's initial results as we're seeing TeraWulf trading down in a fairly big way during today's session. So a lot to go through, Anthony. In addition to all of that, buddy, we just got our new order of power mining hats and t-shirts. So we're ready to go for our tours in the States. Obviously, we're going to Bitcoin Nashville as well. So if you run into us down there, ask us for a hat or a t-shirt. And we're also going to be doing some giveaways in today's comment section. So top 3 comments today, you guys, by likes, we're going to be sending you out some power mining swag. So let's get into it, Anthony. Big day, a lot of data to get through. Before we get into the charts, overall, what were we seeing in the month of April?
Yeah, we've talked about April on many podcasts. That April was effectively the 4th halving, and it occurred late on the sort of like the 19th of April. And the expectation obviously then is post-halving, the rewards drop by 50%. But what we noticed was, and we actually did a podcast the day after the halving itself, and as we were doing the podcast, we could see the spike in the hash price increase from where it should have been at $50 per petahash per day to reach a target of $183 that particular day, so 24 hours after the halving. Now that spike in fees was caused by the Runes protocol. So Casey Rodamor's Runes protocol allowed users to mint their digital tokens directly onto the Bitcoin blockchain. And, this surge just, meant there was more and more fees. So it does open sort of like, for the future, an opportunity where miners will get additional effective rewards or, fees for what they're doing, because the 3.125 Bitcoin rewards that they receive for every block when they're successful is going to be a challenge, especially with the Bitcoin price where it is at the moment, just above the 60,000 mark. So these additional fees that happened in April gave some real sort of like extra cushion for some of the miners, and therefore their results for April, which we'll talk about in a second, weren't as bad. The other thing that happened in April, 2 things that happened. For the first time after a halving event, the difficulty adjustment actually increased by 2%. Now, in previous halving events, you'd expect the difficulty to drop because when the rewards drop, that means profitability drops because your costs stay the same. The rewards drop, therefore you have to make a decision if you're going to continue mining, and all the inefficient miners literally have to switch off because it then becomes impractical to mine. There was a lot of indication that this would happen post this halving, and it never did. Actually, with those runes, it probably meant that mining was more profitable for even some of the more less efficient mining machines on there. So the difficulty increased by 2% post the halving. It then came down by over 6% 2 weeks later. And we'll see, in about 8 days' time when the next difficulty adjustment takes place, if we'll see a further deduction. I mean, because we're seeing earnings coming out at the moment, and we have some, earnings in the first week that were that were relatively okay. And then in the second week, we're now seeing some of the mining companies that don't HODL and the impact it has to those. We'll talk about that a little bit later. The second thing is the Bitcoin price at the end of March was $71,000, and at the end of April, it finished at 60,636. So there was a drop of 15% on the price of Bitcoin. So taking into account difficulty actually increased, a dropping revenues in terms of Bitcoin revenue, and you're only going to get half your rewards. Those few days, the transaction fees did cushion it. And so, we can talk about actually now the sort of like the table.
Yeah, there's a lot to unpack there, Anthony, and the FASB rules are really interesting. As you say, last week we had a lot of the HODL companies reporting showing big unrealized gains on their Bitcoin HODL. And then this week, as we say, a lot of the daily sellers, Anthony. So it's going to be really interesting to see how this shakes out. Obviously, some big interviews left to come this week as well. We've got HODL, Bitdeer, Soluna, and TeraWulf all on the channel. Plus, we're trying to reschedule that interview with Ben from Bitfarms. So a lot of action. But as you say, Anthony, on to the main event here. So let's kick it off with your initial high-level table here, looking at the overall self-mining results for the month of April.
So looking at the monthly performance for April, a couple of key things to look at initially. So in terms of growing hash rate through the halving period, if you look at IREN, they managed to increase their hash rate now through the 9 exahash mark and finish the month at 9.4 exahash in total energized hash rate. And that's, getting closer to their mid-year target of 10 exahash. And then they have another 10 exahash to gain in the last 6 months of the year, which is going to be a challenge to any miner to do that. But that's their plan. It's all on one site. We've talked about it in many podcasts before, so I think that, there's an opportunity to get them as well. Marathon, again, had obviously significant issues at their sites, with nearly 30 exahash plugged in, 29.9 exahash plugged in. They're only able to operate at 21.1 exahash for the month. So that's effectively 25% of their exahash not being able to utilize. And that means it's effectively lost revenues for those periods. So that's an issue for those there. Riot has slightly increased hash rate in terms of energized and in terms of operational hash rate. They've started to include operational hash rate in their updates, which makes sense. If you've got 4 exahash of your mining machines not working efficiently, you need to highlight that, and they have done last few months now. So their average operational hash rate is at 8.8, total energized hash rate 12.6, and we know that its slight increase there is down to the Corsicana energization, which occurred in April, just before the halving itself. And hopefully the May update will increase that hash rate, because we know that the building A1 is completed. It's just now, and all the immersion cooling equipment's in place. It's a case now of fitting those machines in there. And building A1 can take up to 3.7 exahash. So we'll likely see from Riot some major increases certainly in May and June as they fit out that facility at Corsicana, and at the same time start replacing those miners we were talking about that are not working efficiently at the moment. So, although April wasn't, in terms of production, 375. Not a great month. In fact, IREN were very close to that total themselves. So IREN was the 5th largest producing miner in the month of April, so it's Riot's need to start getting those machines in place, need to get that production back, and hopefully in 2024 we'll start seeing those green shoots. We're going out to the site in June, so we'll have a first-hand look at that, and by the time we get there, Bryce, I'm hoping to have that facility nearly at full capacity. What are your thoughts?
Yeah, I was gonna say if they don't have them all plugged in by then, Anthony, maybe we can miss our golf game and we'll go help them out with a few plugins. But no, in all seriousness, it's a very action-packed quarter for Riot. They've got a big transformation on their hands. We've also talked about that in relation to Bitfarms. A lot of these companies are really focused on 2024 as that growth year to offset the impacts of the halving. So now let's get into these charts in a little bit more detail, Anthony. So the first one here looks at the production in terms of 1 exahash per second. So comparing these companies, despite the size or number of exahash capacity they have online, looking effectively at how efficiently they can use each one of these exahash under their portfolio. So the winner this month came out on top was Wulf. We also had some great contention by Bitfarms, traditionally always a very strong contender in this category. And rounding off the top three was actually Gryphon, which is one of the newer members of our analysis, really showing a strong effort there in April. Or what did you see from production per exahash here, Anthony?
Yeah, I mean, Wulf, they're sort of like generally, mid table in terms of production by exahash. We know the sort of like the 3 or 4 miners that normally take the top spaces, and that would be Bitfarms, Hive, IREN, and SATO technology for 2023 filled those top 4 spaces. So we'd always expect those miners to be there, and they are in the top 6, those 4 miners. What we've seen. Gryphon's a new miner that we started to include in our analysis, and we know that as a non-public miner, they used to put their own updates out every month on social media, and they were using their own comparison tables to compare their results with the miners, and they actually performed, quite well in terms of what they were mining compared to some of these established public miners. Wulf obviously had a great month. They managed to get their operational hash rate up to 7.8, so they increased their operational hash rate. I don't think they have as much curtailment at their sites as maybe some of the other miners. Certainly the nuclear site at Nautilus, that's probably working 24/7 round the clock there. So when you have less curtailment, it means you've got the ability to then mine more there. So really good month for those. At the other end of the scale, HOT highlighted again, they've got miners moving from their Canadian sites into some of their US sites. And so from a self-mining, they were only able to achieve, 32.9 Bitcoin per exahash. I think their operational hash rate was about 4.5 exahash. So that's considerably down on what it was a few months ago when they were probably close to, I think it was like 7.2. And we just hope now that these next few months see HOT start to sort of like improve their self-mining. I think their hosting and their managed services seem to be doing well at the moment. I mean, even though they handed over 2 of their sites back to Marathon on the 30th of April, they received a year's settlement in terms of management fee for handing those sites over early. So that was like over $13 million. So hopefully they put that to good use. But one thing you can say is that the difference between sort of like, if you look at even the sort of top 12, 13 miners there's not that much percentage between all of them really now. It's the gap seems to be closing. So miners obviously trying to make as much revenues as they could through this halving period when the transaction fees were really high. We did highlight in a previous update how Core Scientific had managed to make the most of the transaction fees, earning literally 3 times the pre-halving daily amount, or what they should have expected to achieve. And a lot of these transaction fees have gone down now. They're still getting between 14 and 15 Bitcoin a day, and it was 30 before the halving. So they're getting the sort of like their full 50% of the rewards. But great performance by Wulf. And Gryphon, but the other 4 are in the top 6 as well.
Yeah, really looking forward to these interviews this week with HUD Anthony to talk about some of these developments. As you mentioned, moving miners between sites, when we can expect that hash rate to start creeping back up. The next table here, really related to hash rate, is the number of Bitcoin mined in months. So I know you talked about some of the big 3. Were there any other takeaways from this table, Anthony?
Yeah, so Bitcoin mined, if we look at the first quarter, Core Scientific effectively mined the most Bitcoin the first quarter, as they did in the previous 3 years. We were expecting Marathon to dominate after their December production numbers, where they achieved 1,853 Bitcoin, but it sort of never happened in January, February, or March. They've managed to increase their operational hash rate a little bit. They're still close to between 20 and 25% down on where they should be, but they managed to achieve 850 Bitcoin. And that's because of some of the potential things that they're doing with regards to the mining pool there, and be able to attract more transaction fees. So they seem to be getting a little bit more in terms of transaction fees than some of the other big mining pools at the moment. Core Scientific mined 803 Bitcoin, followed by CleanSpark. So those are the three in terms of hash rate, in terms of operational uptime. Those are the three big ones at the moment. Then we just mentioned Riot there, again operating at 8.8. But you've noticed there, IREN now moved into that sort of like that fifth slot there, and they're going to be growing significantly for the rest of the year. So we'll see how much impact they can make on the four ahead of them. Wulf again, due to go to 10 exahash by June, 13.3 exahash by the end of the year. And then, if they can get all their ducks in a row in 2025, they're looking at maybe getting up to 30 exahash by the end of 2025. Bitfarms, 269, they're operating at 7 at the moment. Hopefully we can get Ben on this week to discuss about growth and how that's going to occur. But as we mentioned yesterday on the podcast, they've got 14 exahash to go in the next 7 months. So we expect them to start growing that hash rate on a monthly basis by at least probably 2 to 3 exahash nearly most months. They did announce today that they've managed to get agreement to increase one of their sites to 100 from 100 megawatts to 200 megawatts. And so that gives them more flexibility in 2025. So that doesn't impact what they're doing in 2021. That could take them to close to 25 exahash by the first half of 2025. So they're not taking the foot off the brake, but we do need to see some of these miners who've made these bold predictions by the end of 2024 start to ease into that growth. Hive, interestingly, reached 5 exahash for the month of April, so that was a benchmark for them to get through there. They're also buying, to raise their HPC business. So I think at the moment they're at $10 million of annualized revenue per year, and looking to grow that. They've got a target of 15 million by the end of the year. And if you think about some of the miners who've got the clients at the moment, so we can talk about IREN and the likes of Bitdeer Digital, who've got clients there, significant amounts being spoken about. We'll hopefully get more updates from Hive, because I think that in this space here, they're building their own facilities, they're building their own tier 3 facilities as well for the GPUs, and they've got a lot of GPUs left over from their Ethereum mining days, so they'll hopefully be able to utilize, literally most of those machines. So we'll be following that with a careful eye. And so, and then we get down to sort of like, once we get past Bit Digital, who mine 119, you've got 4 then of the smaller miners, and you can now see the impact of the halving. And if you look at those 4 of the smaller miners there, you're now looking at, a reduced amount of rewards, and going down to SATO technology, who are just averaging now 0.8 Bitcoin per day, post the halving. One thing they have done though at SATO is that they're starting to boost their operations by they've acquired some more S19K Pro, some T21, some F21 rigs, and that will elevate their operational hash rate by a further 17 petahash. And with future rig acquisitions to improve their efficiency, so bring the efficiency down, they're targeting at the moment a 1 exahash capacity at their data center 1. And this will hopefully be financed through their operating cash flow, which at the moment their treasury sits at about 4.7 million, and the use of maybe some other financial instruments to get them there.
Yeah, I was thinking about our conversation yesterday, Anthony, last night, about these growth targets, and Bitfarms specifically. I think you had said they need to average about 2 exahash per month, making a joke. Even I could do the math. And I thought about the math even more last night, and I realized that's essentially like growing the size of Gryphon every 2 weeks, or in that neighborhood, right? So these are quite a big target to have, and this is a lot of logistics and operational complexity to get these machines installed and hashing. So it is going to be really interesting as we continue. I think your idea about that podcast and kind of measuring how close each one of these miners are to their goals definitely has some merit. Now, moving along here into percentage of production sold, Another notable one here was Gryphon, so I'll let you speak to that. And then we've got about half the pack that are still continuing to sell 100% of production here, month in and month out. What were the takeaways on this one, Anthony?
Yeah, I mean, Riot sold none of their production at all. So, 100% of their production went into Treasury. They're fast approaching the size of HUT8's Treasury now. So, when we look at value of Treasury at the end of April, you can see that HUT's value of their Bitcoin was 552 million, and Riot is now 538 million. So there's only 14 million between them, and it's if Riot decide to keep their HODL for the month of May, and HUT, which they've been doing over the last sort of 6-7 months, has been actually utilizing their production, we might see Riot move into second place in terms of size of HODL. They firmly believe, we had Jason on the podcast, and he firmly believes that strategy is the right one for Riot, and he's not aiming, anything at those miners that sell, but they've sat down, they've discussed it as a team, and they've chosen that strategy, and they're fairly sticking to it. CleanSpark, again, we know that they've been hodling most of their production, and the only element that was sold there, I think, is the Bitcoin that goes to their senior management team in terms of part of their salary. DMG have been selling in recent months, so they managed to only sell 46% of their production. So they purchased a significant amount of mining machines that are slowly now being installed at their site, and will carry on until the end of the first half of 2024. That should get them sort of very close then to sort of 2 exahash once all those machines are in place there. But they decided to underclock those machines, and they worked out that by underclocking the machines, they can actually bring the cost of energy down and still mine a reasonable amount of Bitcoin. So it proves to be beneficial. And one thing you have to remember is there's not many people in the space that have been in longer than the likes of Sheldon Bennett. So he will have done some testing and research in this particular space, and he will understand a lot more about mining machines than maybe some of his peers are. He certainly wrote papers on this, on immersion cooling as well, before everybody else got immersion cooling in place there. So from a technical point of view, he's up there with the people that are very knowledgeable in the space. So they've determined that they're going to utilize, I think it's like 85% of the full power, and bring that energy price down now. And we also heard from other mining companies that I think it was Adam Sullivan, was saying he was able to bring the utilization of the power down on some of the older machines and get them profitable post the halving, which was quite an amazing feat to hear. So they were able to do really well post halving by actually switching back on some of the older machines, but not using them at 100% capacity. So we know there's a handful there that sell every day. So like Bitdeer, IREN, Soluna, TeraWulf, Core Scientific have to sell every day. So Adam explained the reasons for that there. Gryphon sold 195%, so they nearly sold twice their production. But they also announced the fact that they're bringing in some new mining machines to replace some of their existing machines, and also to grow the hash rate a little bit there. So you can understand, in the same way that DMG have been doing that over the previous months now, Gryphon have decided to use their Bitcoin to pay for some of those machines rather than to use alternative levers to raise capital.
Yeah, the underclocking discussion's really interesting. I thought that conversation with Adam was very eye-opening, especially how they were setting up some of those older facilities during non-peak energy times as well, Anthony. And like you say, overclocking, underclocking the machines. I guess the analogy you could use for that is similar to when you're driving a car. If you're flooring it all the time versus just kind of taking it slow in your fuel consumption. But very interesting stuff we're seeing in the sector as these companies try and navigate these new post-halving waters. Now, the next one we have here is Bitcoin HODL. Obviously, Marathon is still top spot, but as you mentioned there, Anthony, a couple seconds ago, second spot really up for grabs now as HUD 8 continues to eat into their HODL, and we're seeing Riot continuing to put away more and more Bitcoin. I thought the question we asked Jason about what is your exit strategy for this HODL was very interesting as well. He said there is no exit strategy. We're on the exit strategy. Bitcoin is plan B, and we want to be known as a Bitcoin company, not necessarily an infrastructure, a power, a grid support, an HPC, an AI. They want to be associated with Bitcoin, and that's exactly what we're seeing here. Anthony, why don't you walk us through the updated HODL count?
Yeah, I mean, you've got obviously two distinct views on HODL. You've got those that sell, and you've got these miners now, but you've also got like a section now. These miners that HODL are now moving to sort of like HODLing literally everything. So we've already articulated Riot, CleanSpark. Hive don't sell much of their production anymore. They're using, they firmly believe there. Again, Marathon's still increasing their HODL every month. Bit Digital are doing that, and Bit Digital have got a HODL here of Bitcoin, but they've got an equally sized HODL of Ethereum, probably the largest Ethereum holding of any of the public miners.
And what's interesting about Bit Digital for me, Anthony, is because of this Ethereum exposure, it really gives them a unique, I guess, point of differentiation compared to some of these other miners. We're also starting to see a lot of activity in terms of political discussion around Ethereum, spot Ethereum ETFs. So that's going to be a really interesting one to watch from the Bit Digital perspective as well.
So in terms of treasury, 60 million of Bitcoin, 61 million of Ethereum, and they've got a cash balance of 43, nearly 44 million of cash as well. So a very, very healthy treasury position of 100, nearly 165 million. And when you consider, market capitalization of them at the moment isn't significantly higher than that. It makes you wonder how some of these companies are really valued at the moment. But plenty of treasury there to get them through these challenging periods with the Bitcoin price. And bear in mind, Sam's been on the podcast and talks about why they moved into the HPC side, because they know with HPC guaranteed revenue, and on their April update as well, you could see quite clearly there 4.1 million of revenue for HPC during the month, and it's between 4.1 4.2 every month now going through 2024, up until the point where they actually do all that, because we know that they've raised the contract now by 100% to $100 million of annualized revenue. And when those new servers are fully installed, that'll give them, over $8 million of revenue that won't be changing on a month-by-month basis, because it's not correlated with any other factor like the Bitcoin prices.
Yeah, and what's interesting there, Anthony, I remember when that initial contract was announced from Bit Digital, Sam Tabar was on the program and essentially frustrated at how little interest that had drummed up. It really didn't get the attention we thought it deserved. But since that announcement, especially since the upsizing, we've now seen more and more of these companies, even Core Scientific, one of the big players, really pursuing this HPC avenue. So I definitely think there's something there, and something to be said for Bit Digital really blazing the trail. Now, next up, we've got utilization for the month of April. Again, very similar to the production per exahash, Anthony. We're seeing a large grouping, very close in terms of their overall rating or ranking for this metric. Any standouts in this table?
Well, again, usual suspects close to top there. So Hive Digital generally, are very close to top in this chart every month, as well as the Bitcoin mined. And that's because they're not having any significant downtimes with their machines. Gryphon, obviously a smaller miner, have done really well. They've got 98% as well. And TeraWulf, we saw from their production, had to have a high utilization, because they achieved significantly more than pretty much everybody else in terms of production by exahash. But again, you can see utilization there. So the first, 7 or 8 miners there, all over 90%. So showing, good utilization, because a lot of these miners, especially the ones based in Texas, are going to have to, switch off when the demand for energy rises. So it is a key factor to bear in mind. A lot of these miners can't mine 24/7. They do agree. They're good citizens. They do agree to switch off their machines when the domestic requirement is needed. And in Texas, they can do that. Some of them benefit from that in Texas by being part of some of these programs where they'll get some credits for doing that, and also some reduction on their transmission fees going forward as well. So there's some real benefits from curtailment. But from a utilization, this really looks at a case of what should they have mined with their energized hash rate, what they did mine as a percentage effectively of what they did there. So good performances by Gryphon, Hive, and TeraWulf and Bit Digital, and then there's quite a few then again over the 90% mark. Riot, we know they've got that issue with 4x hash of their miners, so you can see why they're at 67%. We've talked about Marathon, how much lost downtime they've got at some of their sites. I mean, if you're only managing to do 21x hash out of 30, that's a big drop. And then HODL, then we've explained with regards to moving those machines from the Drumheller site and from Ontario into the US facilities, probably some transitioning to get those machines up running. So I'd expect their utilization to hopefully start improving month by month now. And maybe we see them get some orders in to get some, maybe some new miners shortly. But we've got them coming on the podcast this week, so we'll definitely be asking some of those questions relevant to what their plans are to grow their self-mining, because the other parts of the business seem to be doing really well at the moment.
Most definitely. Yeah, looking forward to that. And we've referenced TeraWulf a few times today already. We do have coverage, or at least high-level coverage of their earnings coming up right after this portion of the video, you guys. So stay tuned for that. Now, next table here, Anthony, I appreciate you putting this one together. This isn't one we generally have. It looks over the first 4 months of the year here in 2024 at the average Bitcoin mined per exahash. So very similar to that, I think, second table we looked at. And you can see, again, the usual suspects on top. You've got Bitfarms, SATO, Hive, IREN, DMG in the top 5. But what's interesting to me, Anthony, is you've done an average column on the right here. And if you look at the top performer being Bitfarms in north of 50 Bitcoin per exahash compared to the bottom performer HUT at 40, it doesn't sound like a lot, but if you think about that, that's about a 25% difference, or about 10 Bitcoin per exahash. And these machines are running day in, day out, month after month. It starts to add up over time. What do you think of this table, and what were kind of some of the trends you were able to see here?
Yeah, I mean, so what this will do is, we talked about the monthly Bitcoin production by exahash, and we articulated that TeraWulf had a really good month this month, but it's about consistency. And what this table does is it highlights the consistency of the miners, because this looks at their position every month there. So, in 2023, the top 4 in order were Bitfarms, Hive, IREN, and followed by SATO, and CleanSpark were in 5th place, or DMG were in 5th place. I can't remember. I think it was DMG maybe in 5th place there. And we look at 2024, and we sort of see, Bitfarms, SATO, Hive, IREN, DMG. So there's no real shock as to, the expectation. It does look, relatively close. Again, if you go down to the sort of like the top 12 there's literally about 6% separating, the top 12 miners. And we've already articulated that with regards to HUT, they've had some issues there. We've not been able to mine with machines going down at their Drumheller site. They had the issue with the Ontario with their power provider, which has now been sorted out. But it's moving those machines into the US sites and getting them up and running and active and getting that rate up. So again, April wasn't a great month for them, compared to other months. And we'll hopefully start seeing that improve there. Riot, again, they've highlighted, especially in the last 2 months, have been better in terms of performance by exahash. But if you look at the first 2 months compared, they were really down before they started using this operational hash rate. They were, we had Jason on the podcast. He was saying, we'll stand by our full energized rate there. If we're down, we'll take the hit and we'll learn from it. But obviously in March, they decided to start using an operational hash rate. So again, I'll expect to see those results improve. But generally, a really good performance. But when you start looking at, if you start separating the minutiae between those, the miners that do this day in, day out, you can see from the chart there, and actually SATO and Hive are both on 50.8 there. So in general terms, there's very little separating the top four there, and there was very little separating the top four last year. So with a couple of place changes, it's the same. We're sort of seeing that same result, and this is what this table will show. This table will show consistency, consistently producing the most Bitcoin per month out of the machines that you have. So yeah, it's a good indicator. But the gap seems to be closing now between those that can and those that can. Those that can and those that can't.
It is, yeah. We're starting to see that on across the board, really, with a lot of these metrics. And consistency is one that we talk about over and over on the channel, a lot of times in relation to Core Scientific, Anthony, but definitely important. And I'm really interested to see next month's version of this report when we see the impact of having the May numbers and we start to see the new normal in terms of what these averages and trend lines are going to look at. Now, moving along here, you guys, from the April production portion of the video into the TeraWulf earnings portion, we've got TeraWulf on the channel Friday. We're going to try and go through the financials in a lot of detail in that discussion, get the CFO on alongside Paul Prager if possible. But today we wanted to do just a high-level summary of the earnings that came out today. Top line revenue for TeraWulf in the neighborhood of about $42.5 million. So very close to what we saw from Cypher, Anthony. I think 48 million for Cypher. I know they took a big hit on depreciation this quarter as well from TeraWulf. Why don't you walk us through kind of what you saw on a high level here?
Yeah. So we discussed at the end of last week, we'd had four of the big miners with the HODL, and now they would be benefit from the FASB rules. And we saw that happen. We saw some massive, net income. So profits in that first 3 months of 2024. This week is predominantly miners that don't HODL. So we had Bitdeer announce those yesterday, and they produced a net income, albeit it was 606,000. So they didn't have any FASB. But if you start looking at the amount of gain on the value of Bitcoin that some of these companies apply to their books in the first, in the first 3 months, you can sort of see that's where the big difference is. It's the fact that these companies have been able to have that in their analysis. So TeraWulf had a net loss for the first quarter, and that was just shy of $10 million, so $9.9 million as a net loss, equating to about 3 cents a share. When you look at the adjusted EBITDA, and a lot of these miners use this, it's not a recognized gap metric, but a lot of the miners use it because what they're basically saying is they can look at some of these one-off indicators and some of the non-cash elements that go into the accounts there, and to show that the real position, getting more closer to what the sort of the effectively the cash flow position for some of these miners in terms of money coming in and cash going out on some of the costs there. So when you look at adjusted EBITDA for TeraWulf, it was positive nearly 32 million. So that was in terms of when you're doing that comparison there, it does sort of like put them, ahead of Bitdeer and below where Cypher and Core Scientific finished. You're right to highlight the depreciation. So they did use. Have recorded 15 million depreciation, stock compensation nearly 7 million. So there's $22 million of non-cash costs that have gone into that net income position. So if you took those out of that, there it does sort of give them over 10 million in terms of net income if you take away those two non-cash costs there. They had a small gain on the value of Bitcoin. Now, interestingly, at the end of March, they did have some Bitcoin on the balance sheet, so they did get a small gain on that there. We'll spend more time going through this is the income high level summary, and we'll obviously get our questions through to TeraWulf to get them on the podcast this week to sort of go through some of those points in a bit more detail. They put out a presentation today as well, so it's worth people having a look at the presentation. We can maybe put a link to that in the comments so people can access that. So at the same time there. But if we move across to the balance sheets, so again, we've been looking at the balance sheet. Balance sheet strength is really important, and it's equally more important going through the halving, because basically it tells you how some of these companies have the ability to manage because of their treasury positions. And so the balance sheet effectively for TeraWulf highlights a couple of concerns, which we'll address with them on there. So in terms of assets, current assets, so these are items that can be liquidated in the next 12 months, or an expectation of, and in terms of current assets, they've got nearly $55 million worth. But when we look at the total current liabilities, so these are liabilities that will be required to be paid in the next 12 months. That's $122 million. So there's a question there as to, at the moment, there isn't sufficient cash or treasury to cover that amount. And most of that amount there is the actual loan, which is due to be repaid by, I think it's December 2024. Now, I think when we had Paul on there, and I think with Nazar as well, I think there's an opportunity that they may be able to change the timing of the loan to extend it through extra periods. So that's something that they might be able to tell a little bit more about when we have that discussion with them. But yeah, it's close to 100. It's close to 100 million in terms of debt at the moment that has to be effectively paid by the end of this year. Now in terms of the loans, they made significant payments in the first quarter and then in April as well. So they've the debt was 146 million before December the 31st, and so they've made great strides to get that reduced. But if you take the current cash position and the loan at the moment, I think it's still about 50 million. The sort of like the net loan position. So using their cash there, so they've still got balance. And if that's got to be paid this year, they're going to have to do something to do that. So it could be a case of they may have to do some more dilution, or they may have to extend the loan, or they may be able to convert some of that loan into equity. So depending on who the loan sits with, and I believe. They'll probably quote me correctly on when we have the podcast with them. I believe some of the debt is owned by some of the owners, and bear in mind, 40% of TeraWulf is owned by insiders. So they may hold some of that debt themselves. So it's not maybe too much of an issue to them. It might be an issue to, say, a retail investor looking at this firsthand now without knowing any information about the company whatsoever, and see that your current liabilities more than double your current assets, which is a red flag in terms of you have to be able to pay your bills in a short space of time, and that's one red flag there. Then you come on to sort of like the net assets on the balance sheet, which they've got 272. So taking all the assets, all the liabilities, the net position there is 272 million. The market capitalization today, I did the market capitalization just before the podcast. So again, 680 million is the market capitalization. On their balance sheet, they've got 100 million in debt. So when we do the enterprise value, so the enterprise value looks at cash, looks at the market capitalization, looks at the cash position, looks at the debt position, and they've got cash and cash equivalents there of 45.8 million. So they've got an enterprise value of nearly 734 million. And then we can do some comparisons with the other mining companies, because when you get down to enterprise value, you're then looking at like for like, and then you can start looking at how much hash rate are we driving with that valuation. So yes, we know the debt to equity. 30% of their equity is 37% is debt at the moment. So that's obviously higher. But again, we talked about that debt could be extinguished this year. They're looking to make a significant payment in July on the debt. So if you go to the presentation, it talks a bit more about how they're looking to get this debt down there. So that there's a payment to be made in July. So that's a couple of months away there. And every time they promise to do something, they've done it. So they do keep retail investors up to date with what's going on. And so, I'd expect an announcement in July to say they've made that payment and where it is there. But they may be able to give some insight this week as to what other options are open to them to reduce the debt, which will please shareholders. But obviously, initially last night, the results came out. The sort of like the first of the big companies to come out with a net loss, and so that probably had an impact maybe on the share price initially today as we saw it down at market open. When we look at the enterprise value divided by their current hash rate, which is 8 exahash at the moment, that gives you a sort of a cost value of their current hash rate of about $91 a terahash, or $91 million per exahash, as the table shows here, whichever format you want to look at it. But when you compare that to some of the other mining companies, so you compare that to peer miners, Cypher's at 130, CleanSpark 169, Marathon 131, Riot 126. That looks quite favourable compared to those. And then if you think about their plans to get to 13.3 at the end of 2024, if everything works out, again, it's still ambitious. They've got to get to 10 by middle of the year, 13.3 at the end of the year. And then look at where that puts them. It puts them down at $55 million per exahash. And again, compare that to Cypher at 108, CleanSpark at 91. And then you've got the likes of Marathon and Riot, who are obviously increasing their hash rate significantly. Like most of these miners have been increasing in 2024, but Riot are going from effectively where they are at the moment at 12.6, they're going up to 31.5, and Marathon are going to grow another 20 exahash. So you can see the impact of, if they get that growth in place, it brings down the cost value of their future hash rate down. So it still puts TeraWulf on a sort of like a good level with three of those other mining companies. And we know that we haven't even started to talk about TeraWulf's greatest asset is the fact that it's got probably one of the cheapest energy costs of all the miners. The only thing that's been holding it back is the sort of the debt, and you pay interest on the debt. And I think the debt payments, the interest expense recorded in the first quarter was over 11 million, but they actually only physically paid just about 3.5 million in actual interest. If you go to the cash flow statement and look at the interest paid, because that will tell you the physical payment, go on the cash flow statement in the accounts and you'll see the interest paid, which is about $3.5 million. So that's telling you what a quarterly cost of the interest is based on $100 million of debt. And as I say, they've got a plan in place to make a chunk of that payment down in July, and hopefully they can articulate what happens between now and the next 7 months when the debt's supposed to be repaid in full. What other options open to when we speak on the podcast?
Yeah, I'm glad you pointed out where to find that interest expense, Anthony. We also talked about the current ratio yesterday, and that's obviously very relevant for TeraWulf. The only company on this table to have a below 1, which obviously is what you're shooting for. Now, the debt is obviously the focal point of a lot of retail investors in discussion today. Shares, as you mentioned, Anthony, are down about 9%. But I remember specifically in that conversation with Paul, you had said, do you have a strategy to get your debt into a more manageable situation? And he said, no, Anthony, our debt is in a manageable situation. So again, more than meets the eye here. You look at those numbers, you say, wow, that's maybe a difficult position. But as we're going to learn on Friday, I think this company has a fairly logical strategy to get that debt down to a more manageable number, as they feel it already is. Now, Anthony, I know we've covered a tremendous amount of ground today, a lot of tables and charts. So you guys feel free to go through, pause the video, take a look at these, take a screenshot, whatever you need. Is there anything we've missed before we wrap up here, Anthony?
No, we've had a good session today. Probably longer than we expected, but there's a lot of information in there. And hopefully people get a chance to pause some of the charts and have a look at the charts and be able to do some analysis themselves from those charts and get their own due diligence done before they decide to do what they want to do. But a lot of information in there. As I say, an update from TeraWulf yesterday, and we'll get more about that. We've only really touched the surface of it. Really, we'll get to know more on Friday.
You bet. Well, a podcast for the data people out there, Anthony. We'll get back to the regular interviews tomorrow, you guys. We've got Hut and Bitdeer coming out, a double header tomorrow. Anthony, thanks so much for your time. If you're still here, you guys, smash the like button, hit the follow. We'd love to have you as part of the community. And if you have any questions for us or the CEOs this week, feel free to leave them in the comment section below. That's all for now. We'll see you tomorrow.